Hey, what's up, man? Thanks for joining me. I'm happy you downloaded my scorecard. Listen, I'm going to jump right into it. I'm going to keep this video under about 20 minutes. I want to show you exactly how to use it. As I said before, most real estate agents, the challenge with us actually knowing what we're going to take home at the end of the year is that we don't actually have a mechanism in place to do it. It's not until tax time comes that our CPA tells us this is what we think you made, but even then you have to do all your add backs and all your different tax depreciations, everything to it. So we don't actually know what we make. Since we don't know what we make, we have to just choose a goal like units. 24 units sold, 36 units sold, or maybe even it's like a GCI number. I don't know any orthodontist that ever accepted payment based on a GCI number, right? My kid needs braces, and I know exactly how much that costs. So I need to focus on a dollar amount. And so I want to help you transition your goal from a GCI number, unit count number, to a net number. This could be the year that you are going to make $172,000. And then what you have to do right now, if it's actually a number, if you're really going to make, like as if you were a W-2 employee, $172,000, you have to take your personal budget, what your family lives on, and you have to take your investing budget, like what your wealth building plan is for your future, add that to it, and then add in your oops, your incidentals, your reserves, your vacation, all that. If all those numbers together don't add up or add up to more than $172,000 this year, then you need to pick a bigger number. Or right now it's February, you got to chunk down your expenses. It's really simple. Bringing awareness to the problem is really the first part to bringing a cool solution to it. So this is the tab. Without further ado, I'm going to share it with you. Without further ado, I'm using fancy words. This is the 12-month business budget. So here we go. Now, as I said before, if you are someone who is running, you have an LLC, maybe you have like a small business, hopefully all of your expenses go into one account. It would be great as if all of your commissions came in and all your expenses went out of the same account. If you have multiple places where that happens, okay, just take a little bit of time, pull those all together. When you have all those down, sometimes maybe print it out or just sit there with like a legal pad. Start taking notes. What we want to do is break all of our expenses into just two categories. They're going to be called the fixed expenses. These are the expenses that come out of your account every single month, and there are the exact dollar amount every time. If you have utilities, if maybe you're leasing a space and utilities, I wouldn't put utilities in on the fixed account because every month they're going to be different. You might pay utilities every month, but if it's a different amount, if it's off by more than a couple of dollars, you don't want it. The fixed expenses are the ones we can have the most control over. The most ways to grow and improve your budget is to start chopping away those variable expenses. So don't be too concerned. You should have a lot more variable expenses than you do fixed. But here's an example of an agent. And for the sake of this conversation, I'm just going to pretend this was me. And I'm going to say I'm this 24 unit producer and this is my business plan. Now, it doesn't make it good or bad. It just means this is what this particular agent is doing. So here we go. My fixed expenses, my MLS fee to log into MLS, $480 a year. My Supra, $180. GoDaddy, I pay $18 a year for it. QuickBooks, $600 a year. My CPA, it's $2,000 a year. Now, I don't pay my CPA $166 a month or whatever adds up to $2,000, but every year I pay them the same amount. And so I plan on those costs. Think about yourself as a different business. Pretend you're not a real estate agent for a moment. Pretend you're actually like a real business owner. You would know you have an upcoming cost like realtor dues, which get paid in November. It's February right now, but I know in November I'm going to have that expense. So I'm not going to freak out in November because I don't have the money. Because I'm a savvy business owner, I'm going to amortize over the next 12 months what those expenses are. I'm going to factor on them. I'm going to count on them. So that's what this is. My CPA fees, my realtor fees. I'm going to hire a professional coach. So that is $1,500 a year. Maybe it's just one of these smaller internet courses. That's definitely not what my fee is, but I want you to start where you can afford. Your internet leads is 24 grand a year. Your other subscriptions, it's $5,000 a year. So all of those fixed expenses add up to be $34,458. You can see that on line 26 row F. Perfect. They are what they are. Don't overanalyze them. Don't think about ways to reduce them now. Don't get freaked out by them. They are what they are. This is literally what you're actually spending. If anything, it should give you a little confidence. You now have awareness to what your fixed expenses are on an annual basis. Now we're going to move right over. And this is where we're setting a budget. This is what we're saying. This is the budget that I'm going to set for myself for the year. Best way to do that is go back a couple months and just see on average what you're spending and then poof, just plop these in. Concentric circles means you start small and then you get bigger and bigger and bigger. It's the same thing it is with cutting off our expenses. Don't go hog wild. Don't go freaking out. Just put actually what they are on here. So this individual, I am just going to start saying I spend on my monthly mailers, I'm mailing out to 300 homes. I spend 93 cents per mailer landed. So that's $323 a month. And that goes out mostly every month, but on alternate months, maybe I'm doing something different. So it's not a fixed expense because it's actually going to change. But so on average, I'm anticipating that I'm going to spend about $323 a month mailing to my database. Meals and entertainment. Now, this just isn't so I can take my wife and our friends out and say, let's talk about real estate. I'm actually trying to be a real business owner here. And so I'm anticipating that this is 8 break breads a month. It's part of my business plan to take people out from my sphere of influence twice a week. And I spend on average $55. So that 8 times is $445 a month. Closing gifts. Every time I close a house, I pay $600 in a closing gift. So I'm 24 units. That's 2 a month. Gas and transportation. Now, I'm with you. This is not a spreadsheet that we're turning into our CPA. So right away, when I put that line on there, you're like, well, wait a minute. I know I get 71 cents per mile if I take the mileage reimbursement. And you do. And that's actually how you should do it. But the fact of the matter is somebody somewhere is paying the money to put gas in your car. If you're a younger producer, every dollar matters the most. If you're a top producer, you're pissing away too many dollars. Either way, we need to bring awareness to what we're actually spending. And so on average, I actually spend $250 a month on gas. That should go somewhere. That should be accounted for. You make your money in dollars, you keep it in cents. Facebook ads to promote a listing. Well, I'm anticipating that if I'm closing 24 deals in this next year, half of those are going to be listings. And so I'm going to spend about $173 to promote my listings. Same with listing expenses, staging, photos, etc. $1,500. Transaction coordination, 24 deals, $500 a pop. That's on average about $1,000 a month. And then conference and seminars. Got to budget this in there because we all spend it. Most often than not, though, the way the conference and seminar budget gets spent is you don't go to anything when you're not making money. And then when you're making money, you think you're going to treat yourself to a write-off. A write-off is nothing more than a 33% deduction based on your tax bracket for something you'd already go to. So if you're someone who's been panic hustling for the better part of 2 years, you're finally getting some scratch ahead. You know what you should do is take your wife on vacation. Man, don't go on some conference. Do you really want to go to some conference in Orlando and eat In-N-Out burger or take out food with a bunch of other realtors for a 33% discount? I think way too often we write things off that we really shouldn't. I digress, though. It's your business. Let's go back to it. So once we know what our expenses are, this will say your variable expenses on a monthly basis, line 26, column L, are about $5,300 a month, and your fixed expenses on an annual basis are $34,000 a year. Once we have these 2 things figured out, boom, we get to go to the next. Now, how do you know exactly what your net revenue goal should be? Well, for this person over here, you'll see line 20, for me, line 25, rows A and B, I'm inputting that I'm shooting for $230,000 of revenue. Now, most agents don't actually know how to calculate their revenue goal. And so what they do is just go average price point in my neighborhood is 500 grand, average commission is 2.5. So I guess average commission is 12,500. Listen, horseshoes and hand grenades are the only place averages work. Let me just show you really quickly this other tab that I have. It's incredibly helpful. It's called the Lifetime Sales Tracker. Now, on this lifetime sales tracker, this is exactly what you can do. It should go back over the lifetime, or at least the past couple of years. Most of our real estate markets haven't appreciated or changed that much. So going back to like 2022 should still be pretty accurate with what your average sales price is. You can see here on January 10th, 2022, I closed Marvin Gardens. The purchase price was 560 grand. The commission was 2.25%. I did pay out a 35% referral fee to one of those Dave Ramsey type places. So the gross commission was 12,600. The net commission that I got was 8,100. Perfect. Beautiful. Bob's your uncle. So you just work your way down the list and you import each one of these. You go back and you find it. You see on June 5th, I closed St. James Place, 360 grand, 2.25% commission. Again, paid off a 35% referral. My net take home, or my top line revenue that came into me at that month was 5,200. So when you build out this trend, you can see that my lifetime sales averages, I have 18 transactions in here. My average sales volume is 508,000. My average commission is 2.3. My referral fee that I pay out, when I pay out a referral fee, is 34%. Number of referrals I've done is 10. Gross commission, net commission. What does this do? Well, do you know that if you're on a listing appointment and you're advertising a 3% commission, and for some reason the seller gets you to hogwash, swindles you, convinces you to drop your commission to 2.5%, you just gave up 17% of your total net take home. Do you know that reducing your commission by half of a percentage point reduces your take home down $1,700? So if the commission was going to be 10 grand and you just go, what's the big deal? I'd rather have the listing. So you drop that commission from 3% down to 2.5%. That means your gross take home is now 87 or 8,300. These numbers are huge. They're huge when they're factored over the lifetime of your career, more importantly, over a year. So we actually have to bring awareness to our numbers. That's how we can help improve them. So we can come over here and you see that this individual or me, I now set a goal based on this next year of closing 24 homes. And I'm not worried about getting my commission up. I'm not worried about going after a higher price point. That's all stuff that's going to happen throughout the year. But right now when I'm setting my calculator, I can see that 24 sales will be, based on my current metrics, 229,000. Now, when we're setting our business plan, we don't get to say, well, this is the year that I'm going to start taking listings at a higher price point. I hope it is. And let's set a strategic game plan for that to be so. But you can't use like pixie dust and fairy tales when you're actually setting your budget. You have to use historical data. So I hope you actually start to take listings at a higher percentage price. I hope we actually start to get a bigger commission coming in. But when we're setting budget, we have to work with the numbers that have already happened. If you're someone who historically shows up late to everything, you don't get there sooner because you set your clock 5 minutes ahead. It just doesn't work like that. You start to show up on time, then you can trust the actual time that you have. So we know for this individual right here that they are, yes, I'm still here. Stay on the call. That this is how the math is working for them. So this is our fixed and this is our annual expenses. And then they're just going to get inputted up here before us. Now, this spreadsheet that you're using, the only columns you ever adjust is the blue, nothing else. And so by just plugging in those numbers, we know our revenue goal was 230,000 for this next year. Our fixed expenses are 34 grand a year. Our variable expenses are $65,000 a year. And right now you should be going, dang, that is an exorbitant amount for our variable expenses. But they didn't feel exorbitant when you were plugging them in. They felt kind of realistic and doable. That's one of the problems we have as real estate agents. The opportunity for us to get these huge commission checks is so big, we don't really hold every dollar accountable. We're just like, whatever helps me make more big numbers. And before we know it, we can't sleep well at night. We have so much economic insecurity. Our expenses are almost equal to what our revenue coming in is, and we don't know how we got there. This is the tab. This spreadsheet helps. So the way you use this is after you've inputted your fixed expenses and your variable expenses, the very first week of the month. So it's right now, it's the first week of February. So right now I'm going to reconcile my January expenses. It's just that simple. So I look at how much commission came in. So here we go. We're going to do this in live. Let's say in January, I brought in $14,000. See, my goal, if I want to stay on track with $230,000 of revenue, would be that every month I should be bringing in $19,000. But in January, I just closed one deal for $14,000. My fixed expenses stay the same. So my fixed expenses, my goal is to keep my fixed expenses right around $2,800 per month. And because they're fixed expenses, most often than not, they stay just that way. A really dumb thing us real estate agents do is we have a game plan, we're working our game plan, and then all of a sudden we get a phone call from a sales rep. Zillow calls and says, I got a hot zip code available. Do you want it? And we say, sure. And just like that, boom, we throw out whatever business plan we set for ourselves at the end of the next year. And we just started doing it. Why? Because we don't even know. We didn't know if we needed to do it. Let's say it's May and this guy calls you and says, I have a zip code available. Well, we don't know if we're on track with our revenue goal, on our budget. We don't even know. We just know, I don't know, there's a lot of money in that business account. I might as well spend it to see what happens. We never should spend money that way. It should always be calculated and measured out. We make decisions a quarter before we start to spend them. So $2,800 was the fixed expense, and now it's the variable expense. And for this person, the variable expense was only, for me, the variable expense for this month was $3,400. Why? Well, because it's now February. Remember, I did this spreadsheet to set my budget last month, but this is how it comes out to be. Okay, so let's say Doesn't matter that it's going to change what the averages are. We already said it, right? We're just now concerned about what they're going to be on a monthly basis. So this is the month in January. Typically, I would send out not just my monthly postcard, but it's actually like I can include a $1 scratcher ticket. It says something fun like start the new year with a win. Hope things go well. Love, Andy. And this one, it cost me an additional dollar. So it cost me $660. Meals and entertainment. Maybe this isn't the month that I did a lot of break breads, but I did. I took out my friend and his wife with my wife for dinner. And I said, buy real estate with me so I could call it a write-off. Closing gifts. I only closed one deal this month. $600. Gas and transportation. Didn't do much work. Kind of kept it low key with the family. Spent $100. I didn't take a listing, so no Facebook ads to promote. Wasn't a listing taken. So, oh yeah, actually I took a couple pieces of business. So I took 3 listings this month. And so my listing expenses are actually higher than they normally be. Transaction coordination, I paid for that one deal that closed, and I didn't do any conference or seminars. So this is the month that my monthly expenses were $5,590. So I go right up here, and my variable expenses changed, $5,590. Now you're going to see this tab below. It looks like adjusted the whole budget for the variable expenses, and you are every month. You're actually changing your budget. You're trying to stick to one number, but every time it changes, we kind of want to know where we sit in position to a 12-month rolling budget. So now we go down to the tab that's pretty much the most important one. It's the owner profit. What did your business actually convert from top line revenue into actual profit before we pay taxes? And here you can see brought in 14,000, but the actual profit your company made was 5,500 this month. Oof. See all this red here? It means we are way off. This is column 22, actually column 22, column 17, column 12, or row 17, 22, and 12. These are the ones that keep you as a percentage as to how you sit for the whole year. So we're trying to hit 100% of goal, right? You're trying to hit 100% of goal, but there's 12 months. So that means every month should be about 8.3% of a goal that you're endeavoring for. Never get too hung up on month over month how everything goes, but you can get hung up on how quarter over quarter things go. So if this was actually what I saw in January, I saw that, holy mackerel, I should have made 8.3% of my owner profit goal, or I should be making basically substantially more. Okay, that means in February and March, I have to correct. So if you do this month over month, it'll begin to build you a trend. Now I'm going to jump right ahead, and I did an example, 6-month example. This is how this would look after 6 months. And if you're a real estate agent, much like I was, or much like the people I coach are, these are pretty accurate. Like, this is actually kind of how money comes in, money goes out. So we're first going to look at the revenue. So right now it's July. It's July 6th. The fingers are still smelling like fireworks. The gut's still a little bulged from all the hot dog. And darn it, I'm proud to be American. But I'm going through and I'm reconciling. I just finished reconciling my June budget, and I want to take a 15th, a middle of the year protocol. I want to see exactly how I'm doing stacked up for the first 2 quarters of the year, how they're going to compare to the next 2. And so I put in here in January, 14 grand came in January. I didn't put any income in the bank in February, but March, heck yeah, 35 grand. April 17, May 31 grand came in, June 9 grand. I'm feeling pretty good about myself. It was a lot of money coming into the bank. I had some big months. I'm full of expectancy. But now let's see how I did with my fixed budget. I didn't change anything because I set a business plan in the fall, in the winter, and I just carry it through. I'm not going to let my fixed expenses get changed. So those have stayed pretty congruent. But now here we go to the variable expenses. And if we're all honest, this is kind of how we spend money. So in January, 4 grand. In February, 6,800. In March, 3,700. In April, 6,500. Why? I don't know, because the Cutco knife rep came around and we just thought, what the heck not? Let's buy a bunch of butter knives. In May, 2,200. In June, 3,100. We don't even know what we're making at this point. This is the part of the year where we're just like, I just need to go sell more. But if we actually input this in, if we follow it month over month, then we're left with nothing but the cold, hard truth. And it's either going to be like nectar to our bones and marrow because we did good, or it's going to be like a putrid stank because we're not doing so good. So this is the owner profit column. So this individual, just following this math, because we imported our expenses, listen to this. So they were shooting to make $10,000 a month in owner profit. In January, they made $7,200. In February, they closed nothing, so they actually went in the hole $9,500. But in March, remember March was that 35 grand month, they came up 28 grand. In April, 7 grand. May 26, June 3,100. So we are fortunate that we are at almost 52% of our owner profit goal. That's actually pretty dope. We're doing pretty good here. But here's where we now get to use this, not just to feel good because we're on some fictitious budget. Remember, we set this without really any expectation of knowing what we're going to do. But let me ask you a question. Is there ever a world in which you thought if you generated $230,000 of top line revenue, you would only walk away at the end of the year with 130? No, that's asinine. That means that your cost of goods sold and plus your expenses, like your profit is less than 50% of your total revenue generated. That is a horrible business model when really you can run this whole business from your phone and your car. So now that you have this kind of awareness, you have to actually go back and really analyze, okay, let's talk about these variable expenses. Holy mackerel. Should I really be spending $445 a month on meals and entertainment? But you're going to say, but I get a lot of business from Sphere and Influence. And I'd say, okay, well, let's actually go look at it. Let's go right back to your lifetime sales tracker. And of all these pieces of business that came in last year, how many of them can you directly source to those lunches? And you might be able to pick one or two. And then the first question I'd ask you is, well, is there a cheaper way to stay front and center with those same individuals that doesn't cost you $110 a week and 4 hours a time? And this is where you just begin to build a better business. Most of us don't actually know how to build a business. We know how to go sell more, spend less. Well, let's go look right back at it. So if you are someone who is taking people out and thinking break breads is actually part of your business plan, then my question I'd ask you for is why? Like, why is breaking bread such an important part of your business plan? And you're going to say, well, because I want to love and support and love and dote on the people that supported my business. And I'd say, okay, but is there a cheaper way we can do that? Like, do we really need to be spending $600 every time a piece of business closes? If you're someone that already loves and dotes on their people and you're sending them a monthly mailer and maybe you're inviting them to a couple of client appreciation events, do you really need to spend $600 on a closing gift? And this is where we begin to chunk it down. I'll tell you, this is just what I believe. If you're generating close to $230,000 of top line revenue, and remember, we've already kind of removed the brokerage expense. We didn't include this in it. This is just the money that hits your bank account. You really should be no less than 75% profitability. That means there's 25% for total expenses. So most individuals think the only way to make more is go sell more. That's why if I was to sell actually 24 homes this year, I would set a bigger sales goal for next year, which just means I'm going to spend money at just an equal, horrible, atrocious rate. The first thing I'd encourage you to do is take a cold, hard look at your variable expenses and see which one of these just need to go, right? Like, it's asinine that we're living at 50% profitability. Now, these are all the decisions you get to make because you now have the math and the metrics in front of you. If you just even have a bookkeeper and what they're just doing at the end of every month is reconciling you, giving you a report account, you're going to see how all these expenses are lined out. But it's just like, okay, that's the amount of money that came in. That's the money that went out. It doesn't actually give you situational awareness so you can choose to make better decisions about how to run your money. This tool is dope. Like I said, my wife and I have both been using this one. We use this for our personal finances. I use it for my coaching business. My wife uses it for real estate business. We have 3 of these different spreadsheets. Once you have them up and going, it takes minutes a month to reconcile and take advantage of. You want to sleep good? You run this budget. You want to never be broke again? You run this budget. Hope it helps, guys.